Imagine taking a massive physical property and running it through a physics-based digital twin simulation. A digital twin is a highly detailed virtual replica of a physical object used to run complex, real-time tests. For decades, real estate underwriting has operated as a manual, spreadsheet-driven workflow that traps analysts at their desks for weeks while they compile comps and estimate costs. To stress test complex financial assumptions and map out renovation budgets, these analysts often have to lean on gut instinct to fill in the data gaps. Institutional funds are now shifting away from that manual workflow. They are using AI platforms to ingest property data and run valuations almost instantly, compressing weeks of labor into minutes. This chart compares traditional screening against the new AI-driven workflow. Early adopters report an 80% reduction in time to execute initial deal screening. That compressed timeline means a team can evaluate 5 times more real estate opportunities in a single quarter without adding headcount. In a competitive market, speed to decision is the edge that separates a closed deal from a missed opportunity. GlowSpaces is built to bridge the disconnect between raw physical spaces and predictive financial outcomes. The modern analyst is drowning in fragmented inputs. Between planning permissions, energy performance certificates, and scattered satellite imagery, there is simply too much unstructured data for a traditional team to process quickly. Advanced machine learning models ingest the scattered documents and extract actionable signal from this noise, becoming highly accurate at predicting outcomes without explicit programming. The system directly maps those extracted data points onto a 3-dimensional spatial architectural blueprint of the property. By instantly indexing hundreds of disparate data points onto a single model, an individual investor can screen more properties in a day than a traditional research department can process in a week. The platform is built on 3 distinct functions, starting with predictive valuation forecasting. Instead of relying on human variability, the AI applies a rigorous, continuous methodology to pull comparable sales data instantly, guaranteeing consistency across every property evaluated. The second functional pillar is line item CapEx intelligence. CapEx, or capital expenditure, refers to the major funds used by a company to acquire, upgrade, and maintain physical assets like buildings. The system predicts precise capital expenditure by identifying structural decay and required repairs before an investor ever steps foot on the site. The third and final pillar is immersive asset repositioning. The platform allows users to simulate physical modifications to the property in real time, letting you extend a wall or add a room digitally. These simulated physical modifications instantaneously model the maximum after repair value, or ARV, and calculate pure yield scenarios based on the updated dimensions. ARV is the estimated value of a property after all planned renovations and repairs are completed. The physical asset and the financial model are fused. Altering the spatial blueprint immediately recalculates the financial future of the entire deal. The system automates the most time-consuming parts of the underwriting workflow, allowing the acquisitions team to focus on the strategic questions that machines can't yet answer. By eliminating the manual spreadsheet tasks, analysts can now focus their attention on complex deal-making and high-level strategy. The industry is moving away from periodic, isolated underwriting. The standard is shifting toward continuous, always-on spatial and financial analysis. This network diagram illustrates the scalability of this method. You can apply this exact AI methodology to evaluate dozens of properties simultaneously. This gives emerging fund managers access to the same grade of underwriting once reserved for mega funds with the deepest pockets and the largest research teams. Stop losing deals to slower math. Leverage data-driven spatial optimization and evaluate your pipeline at the speed of the modern market. Real estate investing is shifting to a foundation of spatial and financial intelligence that runs continuously rather than periodically. Alpha is the excess return earned on an investment above the benchmark return, representing the pure value a manager adds to a deal.